right, welcome everybody to Tax Talk with the Money-nista, Natasha Varela. I am a tax strategist, business owner, real estate investor. I have 19 years in audit, accounting, and tax, 13 of which are at the Internal Revenue Service, I like to call the Eternal Revenue Service, in large business and international division, examining large entities that report 10 million or more in gross receipts and our assets. So I want to talk about bonus depreciation because it is extremely important, particularly for investors, okay? Bonus depreciation only applies to 100% investment properties, not your primary residence, not a residence that you inhabit. A lot of people purchase investment properties because they get favorable lending terms and they live in a unit and they rent out another unit. This is not for you guys. Bonus depreciation is only applicable for those who purchase property to 100% rent out, 100% investment, okay? And it's only applicable for the first year the asset is placed in service. Now, for those of you who don't know, who haven't been following me or who have been following me, you know that the tax code favors business and business-like activities only, okay? And so once you turn your asset or your property into a rental, it becomes a business-like activity to the government, the Internal Revenue Code, okay? And so bonus depreciation is probably one of the main reasons that most of these properties are being scooped up by a lot of investors in the last year or two, okay? So let's talk about what bonus depreciation is. Bonus depreciation is nothing more than a fancy word for extra expense, right? Bonus means additional, extra. Depreciation is just a word for expense, okay? When you rent your property out, you get depreciation. Depreciation assumes that the property has a wear and tear over its useful life, okay? We'll talk about residential property, 27 and a half years, okay? The government says you have an asset, a property, a structure. We get to divide the cost basis by 27 and a half years, and each year you get a portion of that as a reduction in your passive income, okay? And we'll talk about how to offset active income at the end, okay? So all bonus depreciation says is, hey, we know that you have the structure, all right? We're gonna give you some expense for the 27 and a half year useful life, but we're also gonna give you some more expense for the items that are associated with said structure because now it is a business, you're renting it out. We know that there are items in this structure that need acknowledgement and that they'll depreciate or wear and tear over a shorter period of time, okay? So what does that look like? That's exactly what it is. Your structure, which is 27 and a half years, then your 15-year items, which is your driveway, your walks, right, your fencing, and then you have your 5-year items, which is your appliances, your removable flooring, your wiring, kitchen cabinet tops, cabinetry, things of that nature, okay? And so this is what bonus depreciation is. Temporary 100% expensing. Now I highlighted it in red because bonus depreciation is phasing out, okay? So for assets placed in service from September 27th or after September 27th, 2017 and before the end of this year, 12/31/2022, you will get 100% expensing for these items, right? Your stove, your refrigerator, your removable flooring, your wiring, your microwave, all these things, okay? Now, bonus depreciation schedule. It will phase out, okay? Starting next year, January 1, 2023 to December 31, 2023, you will get 80%, okay? In 2024, you will get 60%. In 2025, you will get 40%. In 2026, you will get 20%. And in 2027, you will get nothing, okay? January 1, 2027, you will get 0. You're asking me in your head, what does this mean? What does this 180, 60, 40, 20%, all of this mean, okay? Well, let's give you an example, okay? I purchase a property. I get just a little over 23,000 in regular depreciation. This is every year. I own the property and it's rented out, okay? I get that 23,000, okay? And then I have bonus depreciation, right? And where does the bonus depreciation numbers come from? It comes from a professional. If you want to learn more, go ahead and click the link in the caption to join my free live webinar or join the Money Masters Academy Tax Strategies Mastermind, okay? This number comes from a calculation, okay? And so in this example, I have about $100,000 in bonus depreciation just to make the numbers even and smooth, okay? That means they tallied up my professional network of cost segregation firms, tallied up my driveway, my fencing, my walkways, my stove, fridge, all the appliances, removable flooring, countertops, cabinetry, appliance wiring, all that good stuff that I'm allowed a 100% expensing for, right, up until the end of this year, right, from September 27, 2017 up until this year, right? I purchase assets this year, they're placed in service, I get 100%, okay? My total depreciation is 123K, okay, just over 123K, right? Now, this is not including my mortgage interest that I get to deduct and my property taxes, my insurance, all that good stuff, repairs, maintenance, things of that nature. I'm just showing you the effect of bonus depreciation. That is 123,000, okay, of expenses that's going to offset my rental income, okay? So next year, okay, in 2023, I'm only going to get 80%. So if my cost segregation firm, right, cost segregation is a study done for bonus depreciation, right, says, hey, your items, your additional depreciation is 100,000, but in 2023 we only can allow 80%, right? The tax code says you can only allow 80%. I'm only going to get 80K. I'm not saying only in a way that it's bad, because 80K is still good. 80% is still good. You guys still have time, right? So now my total depreciation will be 103K, right? Just over 103K instead of 123K, right? I lose out on that 20,000, right? Okay, and in 2024, I only get 60,000 of that $100,000, right? So the cost of these things is done in a study, okay? But the code says, based upon our schedule, you can only get a percentage of this cost allocated to these items based upon the year you place the asset in service. So if they're worth 100,000, right? We have a study done. We have professionals. We're in the Money Masters Academy. We have our cost segregation study done for bonus depreciation, okay? And the cost of these things is 100K, just to make numbers easy. If you purchase and place the asset in 2024, you're only going to get 60% of it based upon a schedule, right? 100% went away at the end of 2022. The same goes for, 2025. You'll get 40,000, right? So if the cost of those items allocated is 100,000, you'll get 40,000 additional. And in this example, that would total 63, okay? So that's how important it is. And the same goes for 2026. If the cost of these items is 100,000, you're only going to get 20% via the tax code. That means an additional 20,000 you'll be able to deduct on your tax return, which means that plus your original depreciation schedule, right? This is your normal depreciation for your structure, that 23K in my example, plus your 20K in 2026. Okay, that's why it's important to know the criteria for bonus depreciation and the schedule. So in 2026, if I had items that were worth 100,000, right? We got a professional to do it, and I only got 20%. I get 20,000 in addition to my regular depreciation. Okay, and in 2027, you get not a damn thing, just your regular depreciation. There is no bonus depreciation. Okay, that's why it's important. So let's try and put this into our perspective. So you have an investment property, because this does not apply to primary residences. Primary residence, a place where you purchase to live in. You cannot have ever lived in the property. Ever, 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 ever. Okay? You get to deduct your mortgage interest, your insurance, your property taxes, repairs, maintenance, legal fees. You get your regular depreciation, right? I showed you in my example, the 23K. And you get your bonus depreciation. Depending on the year, okay, that's a huge amount. So if it's 2022, you get 100% of whatever the cost is. We used 100,000 in our example just to make it easy to understand the numbers. But you can get bonus depreciation of 115,000, 120,000. It all depends on the cost of your property and the items that are associated with those properties. And again, we use a professional in the Money Masters Academy. We get cost segregation studies done, and you can get the information in the caption. Okay, and so let's put this into some numbers. Okay, so let's say I have rental income. I am 100% investor. I have rental income of 20K. Okay, and my expenses, my mortgage interest, my property taxes, repairs and maintenance, maybe lawn care, whatever, all that good stuff is totaled up to be 120K in the first year, right? Bonus depreciation can only be taken in the first year. That $20,000 in rental income is offset by all of my expenses. Now, I know what you're saying. You only have 20K in rental income and you have 120,000 in these expenses. Well, the good thing is that $100,000 that's left over goes into the next year. We carry it over, right? All you're doing is building up all this good loss to offset every bit of income moving forward. That's the great thing about being in a business-like activity. So let's look at bonus depreciation as a real estate professional. Okay, and a real estate professional is not somebody who has a license to sell in their jurisdiction. Okay, and you want to learn more about real estate professional status, right, which I am, you'll go ahead and click the link in the caption, join the free live webinar, and you'll take the class, right? So you can offset all your income so you can understand. Now, as a real estate professional, right, I have rental income of 20K for an example. And then let's just say I have some ordinary income. Maybe I'm a consultant. Maybe I have a couple of consulting positions. I get a couple of 1099s. Maybe it's all worth 80K. So I have total income of 100K, okay? And now we'll take that same example where we have rental and ordinary expenses of 120K, right? $100,000 is offset, right? My rental income and my earned income, my ordinary income, right? 100,000 is offset. So I have 20K left over to push over into the next year. And I have no tax on 100K. Okay? It's offsetting everything. It's offsetting all of my income. Do you see how people build wealth using bonus depreciation? That's a huge number. And I still have, in this example, $20,000 left over to offset for future years. Okay? And I want to remind everybody, bonus depreciation is not for primary residences. You cannot live in the property. You cannot have ever lived in a property. It has to be purchased for investment only. And you cannot have purchased it from a related party, okay? You cannot have purchased it from a related party. Related party is usually linear descendants, parents, kids, grandkids. Aunts and uncles don't count, in-laws don't count. So I hope this was eye-opening for you guys to understand bonus depreciation, particularly with it phasing out in 2022 for 100%, right? 100% of it instead of 80 or 60, and 80 is still good. But when it starts getting down to 40 and 20, you want to be careful, right? So for those of you who have purchased property and it was never lived in, right, because you can't live in it and you didn't purchase it from a family member, a linear family member, right, kids, grandkids, parents, grandparents, you still can take your bonus depreciation in your current tax year filing. You just need a change of accounting form. Again, we teach you that in the Money Masters Academy. Go ahead and click the link below. You are leaving money on the table. Okay, and we also talk about real estate professional status, but stay tuned. We'll talk about that in another tax talk. Bye, everybody.